The pound has been the weakest of the major currencies that Bloomberg tracks so far this year. It'll be interesting to see how it performs during and after Alistair Darling's speech today. Well, here to discuss that with me now is Derrick, currency strategist at Bank of New York. Thanks so much for joining me this morning. It's going to be interesting to kind of watch what the pound does as Alistair Darling is actually delivering the budget. What are you expecting it to do?
Well, if anything, I think there's space for positive surprises here. I mean, I think that we know that we're going to see something about the £11 billion worth of efficiency savings, and we're going to see a little bit of how that's split up. But I don't think anybody's particularly expecting anything more than that. For example, I don't think we're really looking to know the absolute cuts that each of the departments are going to receive. Now, I don't expect that we're going to see anything there, but if we did, then that would really help clarify how committed the Labour Party actually is to putting through a deficit reduction plan. And that's really what we want to feel here, that we have a government that has a clearly defined plan. Now, other than that, we've obviously got the election coming up, and it seems to me, again, we're pricing in the worst of all possible worlds here. So if anything, it seems to me with a highly competitively priced pound, we actually could have a little bit of a positive surprise today.
But Alistair Darling has already said, going to plan to halve the deficit over the next 4 years. That remains in place. Karen Ward at HSBC reckons that with the extra wiggle room that Darling has got, we've had the deficit figures for January and February this year, £6 billion extra in the kitty for Darling from that. We've got lower unemployment figures, so that could mean higher tax receipts overall, and that Britain could actually end up selling £100 billion fewer gilts over the next 5 years. That's got to be positive for the pound.
Oh, absolutely. I mean, I think that, again, it comes back to this thing that we've got the worst of all possible worlds actually built in at the moment. If we look over the last few months, most of the forecasters out there have been questioning the Treasury's numbers. Most have been saying they've relooked at 2013, 2014. They may be underestimating the amount they need to borrow by £20-odd billion. If we're starting to get more positive data through, as we're already seeing, if we're starting to get more positive tax receipts through, that's great. That feeds to the Treasury's numbers rather than the forecasters' numbers. And again, in the circumstance, that seems to feed through to a positive pound.
But the elephant in Westminster, let's call it, or at the Treasury, could of course be the ratings agencies. Moody's says that Britain's AAA rating is at risk, for example. What are we likely to see on that front? I mean, deficit of 12% could come down, or could be lowered the forecast by the Treasury today. But I mean, that's clearly going to have an impact if Britain loses that rating. I mean, what's going to happen to the pound after that?
Again, I think one of the issues here is that, to a large degree, that threat is already priced in. I mean, not just in sterling, but in the gilts markets as well. So it seems to me that, yes, if you had a downgrade, then it would take a negative hit to sterling. The same way that a hung parliament would be a negative hit to sterling.
Well, I wanted to ask you about the hung parliament because that was what a lot of people in the market were saying was the reason for the weakness of the pound. Is that already priced into the market? I mean, where does the pound go if the Tories win, if Labour wins, if there's hung? Where do you see it going?
I would say that if it's an outright victory for either side, actually the market will see that as being a positive, because that means that there will be a clearly defined plan for dealing with the deficit. And as far as the market is concerned, that is good news. So an outright Conservative victory, or even an outright Labour victory, I think would be seen rather better in a purely hung parliament. But given the polls we've seen over the last 6 weeks, it's clear the market is pricing in that hung parliament risk. I'd actually go with the outside chance here of it being actually an outright victory and it being a positive for sterling.
All right, Derrick, a currency strategist at Bank of New York, thanks so much for joining us.